Hey guys, October 25th, a couple more days left in the month, and this market just wants to be bought, for lack of a better way to describe it. And oddly enough, actually, the first earnings reports to come out this week are actually fairly positive. So I can't even be like, oh, this thing is terrible. Last week's earnings reports coming out of the gate was a lot uglier than this week's. So it really does suggest that corporations in the US are in good shape as relates to weathering a short-term blip. Now, a lot of them are guiding downwards. A lot of them are looking all over the map for what their inflation targets might be, but mostly higher. And so it's a really, really intriguing situation that we've got right now. I'm going to go through today a couple of the earnings that came out, namely UPS, which was really great. Archer Daniels Midland, just a little touch there because it does have implication to both food and oil and gas, and Halliburton and oil production in the North Sea, because that is really going to be about how does Europe make it through the winter, for lack of a better way to describe it. And I think they actually gave some really intriguing nuggets and gems that you can then pull into, how you think they're going to make it through, because that is like, winter's coming. I don't know another way to say it. All right, let's get into it. I'm going to share screen. Past performance is not indicative of future returns. Let's take a look at the indices. You can see they're up much stronger than anyone could have possibly predicted. Crude actually started the day down for various reasons, but now it's back up. I mean, this is really a yo-yo as we all posture into determining whether or not Europe actually has what it takes to make it through the winter without excessive pain. I think everybody knows there's going to be some pain, but is it going to be massive shutdowns? What's it going to be? That one's a tougher call. If we look at FinViz, I'm glad to see Tesla finally behaving normally. Someone asked me, where do I think it could go? Just for the record, if it just goes back to what would be the old kind of price point pre it actually crushing the numbers sequentially quarter after quarter after quarter, then 750 is still a $250 price target. And we're still not even a peg of one, okay, at that point. So just realize that Tesla is severely undervalued for a pure trading dynamic where people believe that he absolutely has to sell stock in order to pay for Twitter. Now, I have mentioned that there's more than one way that he can pay for that. The other way he can pay for it, interestingly enough, is to just get the valuation of Tesla up. Then he has equity value that's a little different than it was literally last week. And you can lend off of that, by the way. But let's ignore that because I'm not conjecturing about that at all. It's more just there's more than one way to skin a cat. He doesn't have to sell Tesla stock as the only means for which he can actually finance a transaction, FYI. Okay, so let's actually get into economic data. That's really not going to be the headline story. We do have GDP coming out on Thursday. But all eyes are really on these earnings reports because the companies are giving massive amounts of intelligence on what's actually happening. We do have GM after the close today. Tesla has to get back past both GM and Ford, given what the rails suggested. And you should see my episode on the railroads. You'll see that actually a lot of cars were shipped this last quarter. We have one more rail to come out and report, but I'm pretty sure it's going to look a particular way because the East Coast versus Union Pacific, which is the weakest rail line, is what it is. And then we still have Google, Microsoft to come out tonight. That I don't even know how to think about it. I would just try to make sure you always have enough cash in case there's an opportunity. Now let's get into UPS. And UPS really tells you that there are some pretty serious winners and losers in this marketplace because FedEx, as we know, take a look at the episode on FedEx, was horrendous. They are more leveraged towards air and they are more leveraged to a particular type of shipping, namely faster shipping, for lack of a better way to describe it. UPS is more ground, and even what they do on water is not going to be about aggressive, fast next day delivery. This is a good quarter. let me just be cut to the chase. All right. It deserves to be up probably more than it is, but everybody's worried about global slowdown, global GDP. So I get it. I'm not going to come out cracking the whip on this one any kind of meaningful way, but this was legitimately a good quarter. And the strategy that was discussed by the CEO, who's been in there since COVID and has really, I think, done a much better job than she's getting credit for, is very much so outlining how they're going to continue to take costs out of the system without necessarily decreasing headcount or anything like that, but take costs out of the system by removing some of the slippage that does happen and just, transitioning from the way they used to do it to more modern ways of tracking packages, namely RFID, something as simple as that. So this was a good quarter. And it really tells you that across, and it highlights what I'm seeing, which is companies that have taken a strategy approach over the last 2 years, really doing significantly better on a share basis relative to others. And this actually is my issue with a number of companies that I've named, not the least of which is Netflix. Do I think you can day trade Netflix? Yes, I do. You should day trade it all the time, because right now the range of estimates and the way that people are valuing it fundamentally is its own deal. But do I think Netflix deserves accolades the way that some fundamental people are suggesting it? I think it's early to tell. I think you're early. It's really what it is. But nonetheless, if you're interested in trading Netflix, I'm going to use that as a way to always highlight my colleagues, who I think is super talented in the AM, Richard. So check out his stuff as well. Links below. Okay. Archer Daniels Midland is one of the larger, well, in the US, it's the largest, but globally, it's one of the larger food producers. And they had some really interesting things to say. First and foremost, crazy good quarter. Would have expected it. They produce food, specifically grain, okay? And things are, as we've mentioned, in farmland, really, really wonderful for them to crush numbers and to do so for at least the next year to come. We've got revenue up 21%, EPS up 96%. And that just comes from the fact that people are worried about their food supply. Now, one of the data points I really wanted to mention in Archer Daniels Midland, because I am a little afraid to just go crazy bullish on specifically ADM because of exactly where it sits and how it gets gamed as a function of where it sits. It sits between the commodities producers, and then you've got packaged good guys that are always trying to push them down on price. So it's in this really strange place. Do I think that this is an undervalued company right now? Ever so slightly, yes. Am I personally going to play it? Probably not. But it was a great quarter nonetheless. Now, what I really want to, why I always take a look at Archer Daniels Midland, I want to understand whether the market reacts to it or not, what's going on with ethanol. Because this has been one of the ways in the last 2 years that we've been able to kind of make up for some of this decrease in oil production. And I say 2 years because we did actually move toward ethanol as well in periods prior, because, we've made it more expensive from a carbon perspective, to really produce nat gas and oil to begin with. Nonetheless, last quarter, we saw ridiculous margins in ethanol, and that really helped Archer Daniels Midland. This quarter, we're seeing slightly worse margins in the ethanol component of their business. Still extremely strong, still a double, but definitely the writing on the walls for them is that they'll still make very, very healthy margins in ethanol, but they don't see it to be what it's been in the last few quarters back. And you can kind of see ethanol inventory is also finally ticking up. So does this mean that oil production and gas production is amazing sauce? No, it does not. Okay. But it does mean that it may be the case that we are starting to see improved production. And I'm going to actually go through Halliburton a little bit and explain precisely the nature of what we're seeing and where we're seeing it, because really this is going to be more North American production versus Europe. And then it's still anyone's guess as to what happens in Europe. Now, the other thing that's kind of relevant and kind of important, and I think is also driving how Archer Daniels Midland is thinking about the different business lines for which they'd like to apply limited resources. There's only so much harvest that happens every quarter. And that had to do with its comments on China. And what it said with China was that given all the different things that were happening globally, you did in grain period, like you did get a slightly better harvest in a couple of different places, but overall grain supply does suggest that next year is going to be amazing for the farmer in the grain area, period. Okay. And we kind of saw that in a number of different data points that we're seeing, even off of CPI, even off of the way things are playing out in other places. But what's interesting is that the types of orders they're getting from China is related to diversifying the location of their food supply. Now, they mentioned they were able to pull either through storage or through harvest about 7 million tons, I believe is what they said. But anyways, they suggested it equated to approximately what they've done in years past out of the Ukraine. Now, whether or not that's going to happen in the next planting harvest season, that's a different story. I don't think people are betting that that's going to be how it's going to roll. So I think we still have very, very tight supply, which is what they talked about. But the other issue is that where is the food supply is going to become a bigger thematic as we move into next year. Because one thing that absolutely has been proven as a function of recent activities is you can't depend or primarily get your food supply from one part of the earth. It's just dangerous to do so. And that's the strategy that they're already seeing coming out of China. For us, we're always blessed in the United States because of our geography and the number and lack of problematic borderland countries that we have, so to speak. But realize that that's, we're lucky, Latin America's lucky, but then you've got all the other countries going on out there. So that was something that thematically you can pull out of Archer Daniel that I think was very important. Now let's talk about Halliburton. Halliburton, crazy good quarter, okay? Crazy good quarter. And like I told you, Baker Hughes was going to do whatever it was going to do, which was okay. Schlumberger was going to do well. Halliburton was going to do well. But this is where I really want to show you what's going on geographically. Europe, Africa, that central area, you're not seeing the same kind of spend in equipment as you do in North America, Latin America, and the Middle East. Okay. And that is almost all related to finalizing and finishing up everything that's going on with Russia. And it also has to do with a decrease in activity in the North Sea. And I've talked about this. All right. I've talked about this. Some people have been very frustrated with me. So I just want to show you, because I haven't really discussed in depth why I feel the way I feel about the UK and Norway and what some of the things they can do are. Now, if you look at 2020 production numbers, you will see that the UK exported for the first time in a while. And I've always said that depending on how they feel about it or what they want to do, they could actually become an exporter. And this is part of the reason why. This is what the North Sea oil and gas field looks like. And you can see who gets what slice. Okay. The North Sea, however, is an environmentalist hotbed. And also, it's not the best conditions, for lack of a better way to describe it, for trying to get oil and gas out of it. Can it be done? Of course it can be done. And of course there are proven reserves there, as well as a whole bunch of unproven reserves that are in that region. Here's the rig counts in Europe. And this European count is going to incorporate the North Sea. You can see in the US, I should put a little box there to help you guys out visually. But if you look, this is October 2021, and you can see substantial increase in rig count in North America, almost July 2022. It's more than flat the last 3 months, but we've significantly increased the rig count in North America. And you can look at Baker Hughes to see how much more significant what we've done, which is several hundred rigs year over year, versus what Europe has done, which is single-digit rigs. Okay. It is not as easy to get Europe rolling as it is the US, for what it's worth out there. As much as I have said certain things, I wouldn't argue that we have a system that is harder to get environmentally things up and running in the US than it is in Europe. In Europe, it's actually far worse. And you can kind of see that despite what's going on. Now, I do want to show you something as well. You're going to start to see these announcements. Sometimes in the US, we don't see it quite as quickly as they do in Europe, but this is the North Sea Transit Authority. This is from October the 6th. The purple is where they're now offering leases in the North Sea for the purpose of drilling. The yellow is where they currently already have some offshore oil leases that are that are out there. Now, whether or not they can get the rig count up and start drilling and find, that's a totally different thing. The last thing as well that I would just mention is that these are very much so collaborative. Like, it's not usually just BP that does it by itself, okay? It'll usually be some sort of collab, for lack of a better way to say it, between Norway and the UK, or between who it used to be Russia and whomever. That's obviously not going to be the partner of choice these days. So that's what's going on. The other thing to kind of note is that Norway, major exporter, they produce, but it's still only about 2% of total, I think, world fossil fuel exports, but 23%. Well, here, I'll just give you the number. This actually is fairly recent. I think this comes from 2021. And you can see that they supply about 23% of the EU and UK's gas demand. The number is a little bit different if you look at global oil production. And then UK, I just want to show this to you so you can see why in 2020 they were able to be net exporters. It is because of the COVID demand reduction that was so significant. Whether or not that demand reduction looks that way this year, last year it did not. This year, it's like, that's why we keep saying winter is coming, because it's a very different picture last year to this year on how you want to think about oil consumption going into this next period, this next quarter. What I would say, though, is that clearly in lowering rates, they've made a call. Okay, so there is that, and that's something to take note of. And with that, I will stop share. How's it going? It's such a weird market today, as per usual.
My question is, there's environmental concerns in the North Sea.
No, there's just more like the environmental concerns in general in Europe are a different animal. I mean, we have them, everyone has them. Everyone signed the Paris Accord, right? So the Paris Agreement. So it's the same stuff that you're thinking is there, it's just,
Okay, so they kind of shot themselves in the foot, but I mean, the Paris Accord that's world, so it's not like
well, I mean, there's a couple countries that respectfully are not signing it.
Well, Europe. So
yeah,
there's no way. There's no way say Norway could increase gas production.
What's that? Say that again.
Could Norway increase gas production for Europe?
I mean, it's the speed. I think the speeds are a little bit unknown. At least for me, they're a little bit unknown. Like, I'm not getting great color from the equipment companies this quarter on how much additional production can go into Europe. But the biggest candidate that I think people are obviously trying to do something about is the North Sea. I would say that the North Sea is called the North Sea for a reason. It's not the best conditions in the dead of winter to try to get more oil out of there.
Gotcha. Okay. And it's real. Okay. Another subject, very, very interesting that you look at rail car shipments out of like Michigan.
Yeah, so UNP is really going to be Union Pacific. So the names give you a little bit of a hint, because every now and then I get a little confused myself. But yeah, I always look at the train loads, because it tells you what's actually getting shipped in America. And here, let me actually I'll go to that slide in a second. But like, if you just look at the rail car shipments, it gives you a sense for what's actually happening in the United States.
Right.
I care about that. Yeah.
I think that's so impressive. Nobody else does that.
Yeah, I mean, I wouldn't say nobody else does it, but I mean, if I had to guess, there's Warren Buffett probably does it. That's why I think he owns BNS, which people don't always give him credit for. So,
Yeah. Right. Okay.
Yeah, but I mean,
as an analyst,
it's not, I mean, I don't think it's common that people trade off of the rail data. It wasn't something that really was commonly spoken about when I was working on the buy side. So yeah.
Right.
But that number is so dramatic. And right now we definitely have an infrastructure issue, but so I care the most. And you can go back to my video from Friday that was released on, I think Sunday, and look at what CSX showed. CSX is absolutely on the East Coast. And so that is definitely a rail. I mean, it's East Coast, but it's also the whole entire Eastern seaboard. You can see how strong the automobile number was, and you can see how strong the coal number was. That's in massive contrast to the Powder River Basin, where coal comes out of the West Coast. I care because there are really three producers in the United States of coal, and that's going to be Consol Energy, Arch, and BTU Peabody. Peabody and Arch, their thermal coal is, and really, in fairness, so is Consol Energy's thermal coals all coming out of that Powder River Basin. But industrial coal, which can be used kind of both ways, in fairness, in a pinch, it does come out of, the East Coast. I think I want to say it's like, oh no, my geography. When I look at the map, it looks like it's Pennsylvania and then a little bit south. And so that is still a pretty dramatic coal shipment, if you will. And
that's very impressive. Thank you. Very, very
yeah.
impressive. Okay, you're building a position in Senseonics, the diabetes.
Yeah, I mean, the stock's a little bit over $1. Is it controversial? Yeah, it's controversial. I prefer, if you are wanting a slow, chilled out pace, I would tell people to just buy the stock and set it and forget it. There's nothing wrong with this company. They have a good product. They have a management team that I think has finally fixed the two things that used to drive me crazy about it, which were like, can they sell or can't they? And also, are they going to fix the supply chain or not? On the can they sell or can't they actually structured an agreement with a company out of New Jersey, and that company appears to be selling the product just fine. And then as relates to the supply chain and whether they fixed that, I won't know really until this quarter, to be fair. I mean, who can know until they report? But the major issue with the supply chain was really it was semiconductors. And so I'm hoping that some of that is resolved, given the alleviation that we've seen in the semi industry. It's not, it trades kind of like, it trades, is it expensive? Is it cheap? For a small cap for a small cap medical device company in the industry that you'd want it to be in, which is diabetes, I think it's actually maybe just slightly undervalued. Do I think it's potentially a takeout candidate? I think it could be. It definitely has great patents, and it definitely, if you had a better distribution arm and you had a different sort of situation, I think you could make it a very beautiful product in the product line. That's why I almost would rather you hold the stock than, if you want to do the options, try to get farther back. In fairness, I was doing the 2023s, Jan 23, but you could absolutely do the Jan 24s, which are really, really cheap as well, and just hold it for the true concept of an option, which is the optionality of it. Because I do think that if it gets bought, it won't get bought here at $1 and change. It'll still probably command a premium.
You're buying the $2 option for around 7 cents.
Yeah, I did that. I mean, I really I figure 2 Starbucks coffees or 100 shares of Senseonics is how I'm thinking about it. But yeah, if you want to go to 2024 and give yourself more room because you want to not deal with the trading environment that is the current situation, you can do that too. For our slower folks and for our folks that just don't like sitting on their stocks, I would advise them to look at 2024 and not 2023. If you're more of a day trader, if you're more like me, which is somewhere between those long-term people and Richard, who literally can hold a position for a few hours, then 2023 all the way.
24. Okay, and their product.
Sorry, 2023. Go tighter. If you're long-term, go wider.
Right. Okay, so their product is a diabetes monitor that you can place under the skin.
Under the skin, yeah. So, different catalysts that might benefit them include getting approval for children to have it under the skin.
Right,
Because
right.
if you think about it, the issue is that if it's on top of the skin, and it pulls out, it's kind of painful, for lack of a better way, number one.
Well,
And number
thinking,
two, your kids are going to roughhouse because
right.
that's what kids do. And so that's just too easy. So having it under the skin is wonderful. They've originally, like, call it a year ago, that sensor had to be replaced every 3 months. And then the deterioration after 3 months was pretty significant. So you really had to that's part of the reason why the supply chain is kind of important. It is a consumable. It is not a set it and forget it, done for life type of sensor. They got it to 6 months and they're working on their way up to a year. Now, they still have growth in actual people that would like to have the sensor put in. So they do have to train more doctors or registered nurses, which is what they talked about on the last call, was allowing RNs to make $1 basically and implement this and put it in appropriately. So it's both a growing demand by just hitting more people, as well as improving the technology so the sensor can be in for longer. That's happening here. And that's why I like the company, so to speak.
Right. Yeah, I think it's a wonderful idea. Your
Yeah.
latest really good call has been Tesla, which
Look, it's so
you,
undervalued. I mean,
yeah, you
Tesla's
saw,
so
I mean,
undervalued.
they hit 52-week lows this past few days. So,
Yeah.
but in your, when you analyzed earnings, you said their earnings were very good.
Yeah, their
Okay.
earnings are really good. And I think what's really intriguing is the battery business, which did have a doubling of revenue growth. And if he gets any kind of movement on lithium, which has been a bugbear and really holding down certain types of, the US really has to get on this lithium thing in a way. It's ridiculous what's happening. And he talked about it on the call, but it's something that we've also been very bullish on as relates to Albemarle. Now, Albemarle has rallied aggressively, so I'm really I'm a little scared to play it into this coming earnings quarter. I think if it gets, but yeah, I mean, Tesla's cheap. Where are the fundamental people? They were definitely there to talk a lot of smack, and here's the other thing. You can't tell me, given the size of Tesla and all the indices, that everybody is equal weight Tesla. You can't tell me that that's true. If I had to guess, I'm sure most people, given how Tesla went into the indices and given what Tesla has done over the course of the last year and a half, I'm sure that there are a lot of big players that are massively underweight Tesla that probably should use this particular selling in theory everybody thinks is going to happen on Tesla as relates to Elon. They should be using it to not be so darn underweight Tesla. It's dangerous, FYI.
Right. Well, I mean, the way the money management business works is, I mean, it's quarterly. So they want something that really is going to perform in the next couple of months.
It is quarterly, and that's an
Right.
extremely fair point. At the
Right.
same time, if you're massively underweight Tesla, which is a big enough slug of a company where it would take a while to actually acquire what you need to acquire, then if Tesla rallies aggressively, it can be very painful for fund managers to find that performance with another company that they're overweight.
Yeah, good point. Okay.
Yeah. Anything else? I mean, fingers crossed, Microsoft and Google tonight. Ouch. It could be interesting one direction or the other.
Well, I'm looking to hedge. Well, I wouldn't be hedging. I mean, we don't even have a position yet, but
I know. I kind of want to just, I have
Amazon
some Hail
seems to have
Mary
a
calls on both of them, to be fair.
Amazon seems to have a habit of missing their projections.
Yeah. Amazon and Tesla are both in a couple of indices together because it turns out they're both classified via GICS, which dictates a lot of the different indices out there, the ETFs that people play. So Amazon and Tesla are actually GICed in the same subsector, which is consumer discretionary. So sometimes I almost wonder if Tesla is just pulling up the whole index, and as a function of that, Amazon benefits. But
Oh, I see. Yeah, good point. Yeah, I mean, I don't know.
Amazon scares me though this quarter. I mean,
Mm.
all of these companies just scare me right
Now,
now.
these guys, Bezos, who's a former CEO, I mean, he's talking recession, so I'm sure he gets that from looking at Amazon numbers.
Oh man, I'm you
All
know
these
what though,
guys
this
that are calling
market has been
recession.
so I like I mean,
What?
autos is one place where there's enough arrows that are pointing in a particular direction, especially new car sales. And all of the metrics agree with you as relates to CPI data coming out and telling you what people are not buying. Even the banks, what people are buying, even though the consumer is strong. Are they buying the random stuff that's on Amazon? Are they buying consumer electronics, which is a huge component of the types of sales that Amazon does? No, they are not. Data came out a little bit funky, if we're honest, which shouldn't necessarily suggest that. I mean, it's always hard to say. You don't know until you know with Amazon, and then you don't know what the street is going to give credit for, because the street has largely speaking ignored the fact that the retail business keeps basically sucking all of the cash out of the cloud business. But
Yeah,
you know,
exactly. I've heard the AWS, their cloud business is the slowest growing out of the three.
at this point, yeah, but gosh, I don't know. I don't want to say anything. I don't have a good call. Sometimes I have a really good call on different companies. I'm like, no, there's no way that happens. But with Amazon Web Services, I'm going to go ahead and just let the other talking heads out there make a call, and then kind of watch it. I think
Now,
it's
right here,
definitely resetting itself right
pre-split, they'd
here.
be pre-split, they would be 2,400, right?
Yeah, it's reset itself all the way to where it could blow either direction.
Okay, cool.
Yeah, because if it
Great
falls,
showing.
it could ease if it okay. On the downside, if it falls, that's why the vol is trading so high right now. If it falls, it could easily be like 105 in a blink. You know what I'm saying? And if it rallies, I mean, the highest valuation or the highest old valuation would have been 2,800. So you've got massive upside possibly on that side. I think that's why I think a lot of these companies are just resetting because the future's kind of unknown right now. It could go either way.
Aren't they at 77 multiple?
What's that? Is
Aren't they
Amazon
at
expensive?
77 multiple?
Yeah.
What?
Yeah, Amazon's expensive for
Right.
sure. But you know what else is expensive that the market seems to want to love is Salesforce. Salesforce defies gravity, in my opinion. It's 40 times, over 40 times enterprise value to EBITDA here.
Yeah, and an activist came in and said, hey, yeah, something's wrong. Okay.
Yeah. And I don't know why people are like, oh, an activist is coming in here. Everything must be awesome. We're going to totally drive this boat
No,
at
that means
100 miles per
something is
hour.
wrong. Just
No,
like Meta,
exactly. Yeah.
the activists, with Meta's going, hey, get your act together. Quit spending 10 billion a year on a pipe dream.
Yeah. Meta, I think, is going to reset itself until it reports as well. That's my real concern with shorting Meta. I want to kind of see, like, if Google and Microsoft actually do well, Meta, in my opinion, will just rally in sympathy. And then you've got kind of a timing disconnect for where would you like to consider putting your bets. So because it isn't reporting this week, I think it reports next week, November 1st or something like that. You've just got this really bizarre straight trading dynamic you have to get past. Microsoft will probably be okay. Google, because of the ad spend, it's very hard to know which direction it will go. But Google's Google, right? You know what I mean? So
I would be hedging.
what's up?
I would be hedging going into all these earnings.
Yeah, I mean, either hedge or be in cash. And if you want to play lottery tickets, consider more of a strangle if you can get it off cheaply. If you can't, just let it go. Do you know what I mean? Like, conserve capital, because
Catch the next bus.
yeah, catch the next bus. You don't have to catch
Meta,
everyone.
I've been thinking about Meta. I think Meta, he has all the voting shares, right? Zuckerberg.
Yeah, he could do whatever he
But,
wants. That's true.
why would, I don't know. I don't think
It's not wrong to do what he's doing. It's just whether or not the street should give him credit for it. Do you know what I mean? Like,
Yeah,
he really, in
I don't
fairness,
think he's ever going to want to throw it all away.
what do you mean? How do you mean?
Well, I mean, if Meta's a complete flop, it goes to nothing. So, I mean, I think he's he's investing a lot in AI. So,
To me,
he
Zuckerberg,
built this huge company, and I don't think he's stupid enough to just throw it all away.
yeah, okay. So with Meta, I get what Mark Zuckerberg is trying to do. And I do think it's the right call. It's a little bit scary to do. Like, I mean, like, is he really going to get credit this year for trying to grow the company or cut costs so that he shows a good earnings number? No, he's not going to get credit. So to me, what he's doing makes the most rational sense. You know, this is stuff that he owns. Like, it's his company, it's his stock. He's got to figure out how to actually generate growth for the next 5 years, not the next, like, whatever is going to make analysts happy. So as far as like, do I think that he's doing the right call? 100%, I do think he's making the right call. Do I think then that the stock is undervalued? That's a totally different question as to what it should be valued right this minute. Because the thing that is not 100% clear yet is, what is the profitability and what does it look like for him to actually have a business that is multiple worthy, let's call it that. You know, has he actually got the right mix of where the next steps are? That absolutely has not shown up at all in the numbers. It hasn't shown up at all in the revenue. Like, we're not talking about just earnings, we're talking about revenue, right? Those divisions are absolutely going to have to be, we don't know how much capital they're going to have to take. We have his projections and we have his thoughts. And then hopefully those projections and thoughts will show something this quarter. But like, that's why I can't be massively constructive about Meta, but I also can't be a complete jerk about it either, so to speak.
Well, I think what you're saying is at some point it's going to be a buy.
At some point at the bottom, is it this quarter or is it the first quarter of next year? I actually would rather it not be this quarter for them, because I think if it's this quarter for them, you know, I think that you get continued it's not going to be this quarter for them. I don't know another way to say it. Like, it wouldn't make sense for it to be this quarter. There's no way he's gotten through enough R&D to really, like, I don't know.
Right. Well, on another show, let's explain why you see his vision. You agree with his metaverse vision on another.
Yeah, I mean, I will yeah, definitely. I will do more of a metaverse oriented show. Some of it's in the other stuff that I've already talked about, but you're right. Like, just pure what's going on with the metaverse and where is he currently trying to sit versus what probably will happen. I don't think he's got it spot on. You know what I mean? Like, devices in the metaverse, if he wants to be like the Apple of devices in the metaverse, it's a tough one. Do you know what I mean? I think he's more likely to be the Samsung of devices, which is still pretty good. But even then, you know, these devices, you're not the only one making them, and you sure do charge more than other people do for these devices, is what I'm seeing.
All the goggles, right? Well, I mean, that could be,
and everything else, yeah.
Technology, those could become something that's very convenient, like a wearable watch or something. I mean, I'm not saying it's a watch, but it doesn't have to be goggles in the future.
That's correct. It could be a different wearable. And then it's the actual technology itself on the, you know, the interface, the graphics, all of that stuff. It's a very, it's a very not straightforward space. And it's quite speculative right this minute.
Okay, cool. Perfect.
Yeah, I mean, I'm excited to see because, you know, a lot of the pieces of that space are not profitable right this minute. They really belong to the world of private equity, where your valuation comes from future projections that don't necessarily equate anything to earnings or revenue for that matter. That's what makes it hard from my perspective.
Yeah, he's in a tough position from a stock analyst point of view.
What's that?
He's in a tough spot from a
Tough.
stock analyst.
Yeah,
point of view.
because he's still a big mega cap company where
Right.
we hold you to an idea of revenue and earnings, and
Right.
he's going to have to dabble in this world that really has valuation approaches that are closer to private equity and VC, which to a classic analyst in that space is going to essentially look like hot potato, a game of hot potato, right?
Right.
Like private equity has always looked like a game of hot potato to me. Do you know what I mean? One gigantic Ponzi scheme, but ultimately,
Yeah.
a lot of
Well,
times those
they're
companies
hit or
get,
miss. Hit or miss.
yeah, very hit or miss. And so that's really what makes it tough for me personally. And that's even with like probably a lot more respect than other analysts have for how amazing he has been as an entrepreneur and as a visionary.
Right.
Yeah.
Okay. May, thank you very, very much.
All right. Good luck. Everybody stay healthy. Take care. Bye.